What is going on, investors? Hopefully you guys are having a great weekend. I wanted to join you again to talk about Facebook, otherwise known as Meta Platforms. As you know, over the last couple of days, this stock fell off a cliff after it reported earnings. In fact, it went down over 20% in one day, and those declines actually held for the following day as well. Now, I think a lot of people thought I was going to get on my Fang Stock recap show and just say, hey guys, have diamond hands, buy the dip, since this is what you hear from the crypto crowd. This is what you hear from a lot of people. But when a stock makes a dip like this, you do need to take a step back and say, hey, maybe I'm wrong. Maybe I don't understand this stock. Let's take a step back and analyze that. And that's exactly what I did with Facebook. And based on a lot of the comments that I got on my video, a lot of you are incorrectly pointing out that Facebook has a forward PE of 17.9. You essentially come to a free website like Seeking Alpha, copy and paste a number and say, hey, here's the ratio. It makes it a buy. Guys, if it was that easy, if investing was literally come to a free website, look at a ratio. If it's at a certain area, you buy. And then if it's another area, you sell. Look, every single person watching this video would be a multi-millionaire, maybe a multi-billionaire if it was that simple. Investing is not that simple. And I'm going to show you why this PE ratio is actually completely off. And it could be off by a huge factor, maybe even double. Facebook's forward PE might be close to 30, might be close to 40. And here's how I'm going to show it to you. Okay, so what I did is I brought up the last 4 quarters of earnings over at Facebook. We're also going to take a look at their cost. And then we're going to take a look at the Q1 guidance, which we got for this upcoming quarter. And we'll take a look at the cost estimates that Facebook gave us as well. So let's go back to Q1 of 2021. The company had $26.17 billion worth of revenue. They had about $14.8 billion in cost. You minus those numbers out and you get about $11.7 billion of operating income. This is not net income. So when you point out a price to earnings, that actually factors in after you pay income taxes. So you actually need to factor in that the company is going to pay probably between 15 and 20% income taxes on that. That gets you down to a GAAP net income. That is what's used for price to earnings. We'll get to more of that here in a second. Now, in Q2, this is when the iOS privacy updates rolled out, and that's certainly some of the challenges that Facebook talked about in the conference call, along with competition from Facebook. Revenues came in at $29.08 billion. You had $16.7 billion of costs. I think it's key to understand, look at our costs. They actually went up by about $2 billion. You went from 14.7 up to this 16.7. More on that in a second. So you minus off these two numbers and you get to about $12.3 billion worth of operating income. Again, nothing really that bad, really strong results over at Facebook. Get to Q3. Notice that after the iOS update, well, all of a sudden our quarter over quarter growth is basically stalled. In fact, it went down a little bit. We had $29 billion worth of revenues, but unfortunately our costs go up by another roughly $2 billion, a little bit less, up to about $18.6 billion. That gives us operating income at $10.4 billion. Now we come to Q4. This was the most recent quarter that Facebook just reported just a couple of days ago. Keep in mind, in a fourth quarter, everybody and their brother is advertising online, and certainly Facebook being a premier destination for that, they drew in a lot of advertisers. They drew in $33.67 billion worth of revenue in the most recent quarter. Now notice what also went up in the most recent quarter by about $2 billion. In fact, a little bit more. Our cost went up to $21 billion. You take this 33, you minus off the 21, and you get to about $12.6 billion. Now, let's move into the Q1 guidance that we got from Facebook. On the actual press release, they say for the upcoming quarter, they're expecting $27 to $29 billion worth of revenue. Now, we will assume maybe Facebook is sandbagging a little bit and they might overreport. Most companies come underneath and then they come over it. And I don't think they're going to beat it by $1 billion. Look, the high end of the range is 29. My guess is they'll come in at 29.3, 29.4, but we'll give them credit. Maybe they can get all the way up to $30 billion. But what is going to change for Facebook, and I don't think a lot of investors understood this, is the fact that here's a direct quote from the press release over at Facebook. It said, we, Facebook, expects 2022 total expenses to be in the $90 to $95 billion range. That is updated from their prior outlook of 91 to 97. So they actually tightened up the range and actually came underneath it a little bit. But what I want to do is annualize out this cost structure, okay? Basically look at it for 4 quarters. Also, I talked about how every quarter over quarter, this company is growing their costs by about $2 billion. So I think it's fair to say in Q1 of the upcoming quarter, Facebook's going to do about $23 billion in cost. If you times this by 4, you get to $92 billion, which is smack dab in the middle of the guidance that they gave for their total expenses. I don't know if that's how it's going to shake out. Maybe it'll come in a little lower. Maybe it'll come in a little higher, depending how Facebook wants to amortize this 90 to 95 billion that they've guided on that cost. But here's what I want to show you. Take our 27 billion to 29 billion. That was the guidance. We might even go all the way up to $30 billion. We give Facebook credit for just completely sandbagging things. And we minus off this $23 billion in cost. Well, on the low end, this company is going to do operating income of $4 billion. On the high end of sandbagged guidance, you're going to do $7 billion. Do you see what's completely different about Facebook, guys? Is we went from 11 billion in operating income to 12 to 10 to 12, all the way down to 4 to 7. Okay, now start annualizing this number out, minus 20% off for income taxes, and now calculate your PE. Hello, the PE is not 17. It could be as high as 30. And then bring up companies like Google and do the same exercise we just did and figure out what Google's forward P might be next year. And maybe Google is actually trading at a lower valuation to Facebook. And they weren't on their call talking about TikTok, talking about the transition from stories to reels to feeds. Now, could Facebook figure this out? Just like they did with mobile ads, just like they did with their mobile app, just like they've done many, many times over the history of the company. I actually believe they probably will figure it out. Could the metaverse end up being this fantastic thing? Yes, it could. But in the shorter term, there's a reason why the stock dropped 20%. Don't come to my comments on my YouTube channel and copy and paste a forward PE. That is not correct. This forward PE doesn't factor in the forward guidance that Facebook gave to you right in a press release. Analysts have not re-rated this stock from a forward PE basis. We only have 1 quarter of guidance, and it's so far off from what we've seen quarter over quarter. My guess, this is why the stock dropped, because analysts is like, I don't know how to analyze this company anymore. That is why this stock dropped. Because people saw this company was consistently churning out $10 to $12 billion worth of operating income, and then all of a sudden it hits the brakes in Q1 and goes down to 4 to 7 billion. And again, 7 billion is on that high end based on sandbag guidance that's over $1 billion, which I wouldn't expect out of Facebook. Understand what you're looking at in this market. Understand this channel. While we talk about Facebook a lot, we are not this company's cheerleaders. We deal in reality on this one. And the reality is the price to earnings ratio forward is not 17. If you annualize out this $4 billion, take off income taxes, the price to earnings forward could be damn near close to 30. And if things get worse over at Facebook, that price to earnings multiple is only going to get higher. Now, do you want to buy the dip on this one? From a technical perspective, there are areas where we like this one. There are areas where we would not like this one. We are monitoring it over the next couple of days, but don't just make your investing decisions on a price to earnings forward ratio that you find on a website that is completely and utterly inaccurate and not based on any factual data that the company literally gave you 2 days ago. I hope this video helps you guys understand things when companies give forward guidance not only on their revenue, but gave you forward guidance on your cost. You can start to back into the price to earnings ratio. You do not go to sites because this is completely out of date, and it will likely be out of date for the upcoming future, because when a stock drops off like this, it basically means analysts have no idea how to value this company, and that could keep Facebook in the penalty box for the time being. Hopefully you guys enjoyed this video. Back again soon with more. Good luck with your investments.